Bitcoin continues to trade sideways and continues to be boring while seemingly everything else in the world is on fire. It reminds me of that dog meme where he's sitting in the burning room saying, "This is fine." And maybe it is fine that the correlation is finally dropping between Bitcoin and the S&P, and more specifically, the NASDAQ. But there's still a lot of reasons to be pessimistic, with the Fed continuing their hawkish tone and rate hikes, and Bitcoin and other markets obviously just reacting to whatever the Fed says and does. I have a great guest today, James Butterfill. We've had him before, from Coinshares, who has a ton of research and perspective on what's going on with Bitcoin, how that's related to what's happening with the Fed and other global markets. Once again, bringing in an intelligent guest to give you guys the best possible information. You guys don't want to miss it. Let's go.
Let's go.
What is up, everybody? I am Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel. And I just found it again. Use your SHIB oven mitt to slap the like button. Everybody has a SHIB oven mitt just laying around, right? When your hand gets hot and you need to get something out of the oven, you reach for your trusty ramen eating SHIB. He's actually not eating the ramen. He's just holding it and waving. Technically, I don't know if he's going to eat it or not. So guys, as I said there in the introduction, today we're going to be talking largely about macro, of course, and the Fed. Now, Bitcoiners, we're still not really used to talking about macro. When I was talking to James before the show, our guest, I was sort of joking that crypto people have no idea how to consider macro. We were very used to just being able to look at the blips and bleeps on a chart and make our decisions based on that. Then you have the stock people who really are confused by what's happening in the bond market and don't understand that. And the bond market people are confused as to how it can be dumping while the stock market's dumping, and they're looking at the Fed. So basically, nobody has any idea what's going on, and everybody is seemingly confused. But the good thing is we have people who actually look at this data and this research, including today's guest from Coinshares, James Butterfill. I'm going to go ahead and bring onto the stream right now. James, welcome back. Thank you so much for joining.
It's a pleasure.
Yeah, so listen, you sort of alluded to the fact that in your past life you were a Fed watcher and that you've had to become a Fed watcher once again. Can you talk a bit about that?
Yeah, I think you have to look at conceptually what Bitcoin is, and ultimately it's a scarce asset that's priced in dollars. So what the Fed does when rates are super low and money's being printed, something that's a scarce asset is likely to do very well. And then on the flip side, when money's like quantitative tightening, when money's is contracting, actually conceptually something like Bitcoin shouldn't do so well. And that's why we've seen the Bitcoin price tank this year. The Fed's been super aggressive. And so actually I find myself suddenly watching the Fed once again in my career. And it's incredibly important. You can see the Bitcoin price now really react to data that's crucial in the Fed making their decisions. So something like CPI. When you see a CPI print, you look at the intraday moves as soon as that print's released, and you'll see an immediate reaction, plus positive or negative, to Bitcoin. It tells you that Bitcoin really is like a lot of traders are responding to what the Fed's doing and what macro data is coming out. So yeah, it's becoming incredibly important now.
So then that leaves it to us to determine whether the Fed is doing a good or bad job, whether they're creating further problems or fixing them. What's your opinion on that?
Maybe I've got a slightly jaded opinion on this, but I think the Fed, with other central banks, typically do knee-jerk reactions. So this time last year, people were saying inflation is more permanent, not transitory. The Fed should be doing something. The Fed had that transitory point in their minutes and eventually took it out, indicating that they didn't think it was transitory anymore and they thought it's more permanent, and therefore they should react. It was too late by that time. And so what they've had to do is a series of very aggressive rate hikes. And that the problem when you do that, when you hike so aggressively, a 75, I think this round of rate hikes now is the most aggressive that there's ever has been so far in terms of the amount. And that risks plunging the economy into recession. Had they started earlier, maybe they wouldn't be in this situation. On the flip side of that, when it comes to looking at signals to rein down, to pull in and sort of slow down these rate hikes, they tend to be quite slow. It's a bit of a depressing thought, really. But this is probably where we are right now. So they've had these aggressive rate hikes. We've not seen headline inflation come down just yet. But actually, inflation's quite a lagging indicator. You don't see, on average, for the peak interest rate hikes, that is what they call the terminal rate, and the peak in inflation is about 15 months. So the terminal rate happens 15 months before the peak in core inflation. And so where we think now, we're already at this point where core inflation, it might not feel like it, is at its peak. It's at a 1986 high or whatever. No, 1982 high, sorry. So actually the Fed is behind the curve again and really risk plunging the US into recession. And it's probably too late.
Yeah, it's interesting you say that they should have probably reacted earlier. You could also argue that they created the problem themselves and shouldn't have printed for so long before even reacting. So it's hard to judge whether they're doing a good or bad job when you know that they created the problem themselves in the first place. You talk about core inflation. I don't know if you've seen this, but Kashgari, who obviously was notoriously a bit of a dove, for the Fed, he says that Fed can't pause rate hikes with core inflation accelerating. So he still sees core inflation accelerating, as I think rational people like us say, maybe it's lagging, as you just mentioned.
I think there's lots of indicators you can look at to highlight actually that inflation is poised to really start coming down.
I agree.
And so you've got rent indices like the Zillow index really cratering now back to sort of COVID levels. So we know rent's going to come down. We've got a downwards trending wage growth. It's not in the core calculation, but gasoline prices are obviously falling. That's important. We've got, really sort of quite falling PPI data that came out this week. The manufacturing data, real weakness in manufacturing corporate confidence. There's a lot of indicators. If you look at the CPI print, the headline CPI print that came out last week, it was to do with two real components, just the services component, and within that, it was just the manufacturing. No, it wasn't. There's one particular comment. It was to do with transport services was the key component that was really pushing up that. So pretty much the rest of the economy is really starting to trend down, and that does suggest that inflation should start coming down.
With that in mind, can Bitcoin rise until the Fed pivots? You sort of outlined, you and I discussed three basically main components that you view Bitcoin driving or giving us some indication of what's happening there with the crypto market. Obviously, the macro and rates. Second being miners, and third being fund flows. So maybe we should just dive into each of those. So the first question, rates and macro, can Bitcoin rise before the Fed pivots?
Now, I think if you look at the start of the year, inflation, Bitcoin and equities are highly correlated. Nothing to do with it being a risk asset, and that's a frustrating narrative this year, just purely because they're both interest rate sensitive assets, and the Fed was being really aggressive, so that increased that correlation. Now, we know that until the Fed back off, we're not really going to see, i.e. pivot. We're not really going to see any kind of measurable rise in the Bitcoin price, sadly. And, probably another 75 basis points hike in November. I would look out for things like, towards the end of the year, bad PMI services and PMI manufacturing data, building permits, all the kind of early things that tend to highlight a real weakness in the economy, all of which are starting to not look great, except for PMI services. So that, I think, will be the really important indicators to look out for any kind of measurable rise. I think there is I talk about correlation. I think there's a building narrative now. We've seen a divergence in correlation between Bitcoin and equities, for instance. Equities over the last month are down 5%. Bitcoin's actually up, I think, about 1 or 2% now.
The correlation now is 0.04, which is non-existent. I mean, it's as close to zero as it's effectively ever been over that very short time period.
Yeah. And so, it is that's it. And I think it's due to that narrative of people starting to look at the Fed and thinking, hang on a minute, actually what you're doing is plunging the US into recession. It is causing real problems, and this is a policy mistake. So I do think that divergence will continue. In fact, this is something I'm writing about right now. I think it's a really interesting sort of early sort of story that's starting to build.
It's hard to lose the irony, though, of the fact that as Bitcoiners and crypto enthusiasts, everyone rails against money printing and monetary policy. And then the minute it makes your asset go down 60 or 70%. All of a sudden,
Yeah.
you really want them to turn that money printer back on. But I guess that's a topic for a different day. The second thing that you highlighted was the plight of miners at the moment.
Yeah.
We're in a really unique situation where there's a sort of a glut of miners on the market, people basically going out of business. It's not profitable, and hash rate's still at all-time highs, right? So what's going on with miners?
It's kind of like perfect storm. I mean, you've seen a dwindling revenue environment, i.e. the Bitcoin price falling. And at the same time, hash power has been rising. That seems, if you look at previous cycles, hash power by now probably would have started declining. But because of the hype late last year, a lot of miners entered into funding agreements to buy new hash power. And they ordered all that massive amount of hash power. It was actually they were buying miners at $80 per terahash.
Yeah.
Now it's the problem they face is that they're receiving all this hardware and they're having to put it online. It's actually much more energy efficient than the latest Antminer S19s are much more energy efficient than the previous ones, because I think they use sort of 5 nanometer sort of chip technology, which makes them more energy efficient. And essentially, so the hash power is really picking up right now. There's no point in not putting that stuff online. And this can cause problems for lenders in the space. So, if you can buy hardware, which you can at $20, $25 per terahash now, that could cause problems for lenders, because those that bought at 80 might say, well, it's better for me to default on that debt and then buy it at this cheaper price.
Yeah.
So it could cause problems for the lenders, but also those miners that are receiving this hardware that might not have got purchasing power agreements in place. Now, Argo blockchain is a good example of that, and it's really suffering right now. It didn't secure a fixed price. So I do think some miners will be okay. They have sound balance sheets, they have robust purchasing power agreements, and they're likely to continue to do quite well, and actually might buy up some of this other hardware that will come online from the other miners that are going bust, essentially. So there are these really weak ones that are probably over leveraged, not got purchasing power agreements, that are going to really suffer. And I think we are at the kind of late stage of this kind of bear market, where you see this kind of miners capitulation. And funnily enough, this massive ramp up in hash power have obviously created a 13-14% difficulty rise in the mining rate, and that actually accelerates the problem, because it means the margins are even tighter for those weaker players.
Right, and they just go out of business. Is there a price for miner capitulation? I've heard, the 17,000 area would sort of flip the switch there, and we would see that major sell-off.
I mean, there's huge variance from 3,000 to 50,000 marginal cost for miners, but we think it's around the 13,000 mark on average if you take the key players in the space.
So does that mean that it's likely we see a drop to those areas to sort of cleanse the miner market?
I'm not sure. I mean, and this brings us on to fund flows right now. We're not seeing people sell out at these points. We're not seeing people buy much. Maybe it's apathetic, but we're not really seeing people sell out now. People just seem to be holding, or we've, anecdotally speaking to clients, they're saying, I'm just waiting for the Fed to pivot and then I'm buying Bitcoin, essentially. And I think we're in this just kind of holding pattern. It's going to happen soon. We don't know exactly when. Initially, sort of earlier on in the year, I thought Jackson Hole meeting in end of August, that would be when the Fed would pivot. That didn't happen. I think one of the funny things this time around in this economic crisis is that COVID led to actually an increase in cash savings in households and corporations, and they're just now spending down that savings quite rapidly. Actually, once that runs out, I think that's when things really start to hurt. Next couple of months we see that. But yeah, fund flows is just a bit dull at the moment. People aren't buying and they're not selling. There's people sold out shorts in quite considerable numbers a couple of weeks ago, that then bought back again. So we're just talking sort of 11 million here, 10 million there in terms of weekly fund flows. And they represent 0.05% of assets under management each week, which is incredibly low, because we're usually seeing moves greater than 0.25% of assets under management.
So listen, not speaking for Coinshares, just as an investor yourself, then what's your view on investing in this market at this point?
Yeah, I think if you, I always advocate a sort of a longer term approach to things. I'm not sort of a day trader. I have a long-term investment horizon. Maybe I'm a hodler, I don't know. But for me, I think now is an interesting entry position, because I don't think there's a huge floor in prices. You might have to wait 3 to 6 months for a measurable price increase. But there aren't that many opportunities that come along when Bitcoin's on sale like it is right now.
Yeah, I agree. And it's funny, when we were talking before, you said, yeah, anyone with a long time horizon, this is probably a good opportunity, maybe 6 months. And I sort of laughed because crypto people really think 6 months is a long time horizon, when in theory,
Yeah.
as an investor, you're maybe thinking in decades or lifetimes, right?
I think if you look at like some of the most successful investors around the world, those with incredibly low stock turnover, like 10% annual turnover of their portfolio positions, tend to be the most successful.
Yeah, I mean, obviously makes sense. We know that traders tend to fail, and that the wealthiest people on earth probably never looked at a chart. They just simply invested in things and let inflation do the work. So, I mean, considering a Fed pivot is inevitable, then we have to imagine that this bear market is transitory. I guess at some point, like
I
everything
think
else,
so.
right? There was
Yeah,
always another bull market.
it comes at a time when, if you look at, I spent a long time looking at positioning in the dollar, and the DXY, we know, is that's a trade weighted dollar against a group of countries. It's very high. I think sort of mid to 1980s high. There's several other sort of valuation metrics you can look at. You can look at sentiment towards CFTC futures positioning, and that is highlighting quite an elevated long position for the dollar. If you look at something called purchasing power parity CPI, that's the highest it's been since 1985. And then if you look at relative yield, so if you were to buy a 2-year treasury versus a 2-year treasury in Europe, for instance, on a relative basis against its key trading partners, that's at sort of the highest it's been since 1983 or something. So we know the dollar's very overvalued. So when the Fed does pivot, the trade weighted dollar could really flip quite quickly and quite sharply, and that would be quite supportive for something like Bitcoin.
CoinDesk had an article just this morning that I just pulled up while we were talking about that. It says Bitcoin stuck in a rut, as we know, as Bank of America survey reveals long dollar is the most favored trade. Right. And that's exactly what you're talking about. I mean, everyone's long dollar, and I think probably dollar bears continue to get punished a bit short term. But when everybody starts to get long and this becomes the trade, doesn't that mean that we're probably near the top?
Exactly. Yeah. And, whilst I say the dollar's sort of overpriced, it's very hard to get the timing on this right. But again, if you take this longer term approach to investing, then, it's actually now is quite a good position. Yeah, it could appreciate a little bit more after the next rate hike, or just prior to it. But in the sort of grander scheme of things, it's historically incredibly overvalued.
Yeah. Well, any final thoughts for everybody before you go? Any way that they should be looking at the market, or is it basically just we wait for the Fed and take a nap?
Yeah, I think wait for the Fed to take a nap. Read my blog.coinshares.com. I'll be publishing something on correlations in the next day or so.
Well, yeah, make sure to tag me in that tweet so that I can share that,
Absolutely.
because I would love to read it and definitely don't want to miss it. And I hope everybody here follow James. Is it James Butterfill on Twitter?
That's right, yeah.
Just
No, Jay Butterfill.
Jay Butterfill. See, I would have blown that and sent people to some scam account that's trying to ask you how your trading's going, and why is nobody talking about this? Like all the bots on Twitter, which are out of control, by the way. Now I post anything on Twitter and it's immediately 300 responses from bots. Absolutely unsustainable. It's
I'm
disgusting.
not at that level yet.
Yeah. Well, guys, everybody go follow James. Keep up, James. You're welcome back anytime. I would love to have you more regularly to keep us updated on what's happening with the Fed and beyond. Thank you so much.
Thanks.
I think it was funny. Somebody up here I saw in the comments while we were going by, I had to chuckle, said that he was like James Lavish's British doppelganger. There it is, Jeff. And we had James Lavish on obviously yesterday. To James, that's a huge, massive compliment, because everybody here loves James Lavish. So, and you are both Jameses, I guess, collectively Jameses. So moving on, obviously, I think that all of what he just shared is accurate, and that I certainly was Mr. Uncorrelated Asset and probably was last in line to accept that the correlation had increased earlier this year and that we were so at the mercy of the Fed. But the good news about being at the mercy of the Fed, as I mentioned before, is that they will inevitably start printing money again, because that's what they do and what they have to do. So it is just a matter of patience and time before things change. Now, whether we're okay with being at the mercy of the Fed is an entirely different conversation. I mean, speaking of being at the mercy of the Fed here, as you can see, there were 3 hidden words from Fed insiders point to much higher rates. If you're thinking that they won't raise 75 in November, maybe again in December before slowing down likely at the beginning of 2023, well, this is sort of a key thing that nobody's talking about. It says their gauge of U.S. potential output was revised down significantly. That's 3 words. The minute showed due to disappointing productivity growth and slow gains in labor force participation. Basically means that the economy is running even hotter than they think because there's very little expectation of increased productivity and GDP from the United States. Long way of saying things probably aren't going to get better any time in the immediate future. And speaking of times when things were bad, today, October 19th, the 35th anniversary of the 1987 stock market crash. The biggest downside day in the history of the Dow Jones, known as Black Monday. And I wish I could say that I wasn't alive when it happened or that I was too young to remember, but I was there. I was 10. I remember my parents talking about it. As crazy as that is, I was actually alive when this happened. I think I turned 11 a month later. So yeah, this was the worst single day in stock market history. To give you some perspective, it dropped almost 23% in a single day. Absolutely insane. That was 508 points at the time. To give you some perspective, that would be roughly a 7,000 point drop today in the Dow. Now, when I was at WebEx in Vegas, actually, Dave Weisberger gave an incredible masterclass, which I will share with you guys on my channel, about the history of these sort of stock market failures. And this was one of the big ones, I believe, that he discussed. And there's been a lot of reasons now that this hasn't happened again, right? People are like, oh, it happened. I'm hearing a lot of Black Monday, over 20% in a day. That could happen now. Well, probably not, because a lot of reactions in policy and rules were made after that, like the good old-fashioned circuit breaker, right? So now we would have circuit breakers that would stop the market from trading in that panic and give people a reset and the opportunity to breathe. Also, the market was massively up that year. I think it was like 35% coming into that. And while there was a bit of a decline the few days before, here it is. It fell 3% October 14th, 2.3 on the 15th, and 5.2 on the 16th. It was largely massively up and saw all of the gains of the year almost, or a big percentage, wiped out in a single day. Think about that. The Dow right now, I believe, is down about 22% in this entire downswing that we've seen. Given the Dow is no longer really the gauge, people look more at the S&P, of course, and the NASDAQ. That happened in one day. The entire basically bear market we've experienced happened in one day. So to have another 23% drop from here when we're already at 20% seems extremely, extremely unlikely. Now, as happens in bear markets like it did there, the days after had huge bounces, and then the next week it dropped massively again, basically erasing the gains off the bounces. I think one of the days was up like 9% 2 days after. And then it took until December for the market to entirely bottom, and then it was up 10% in December and continued up. But these huge, massive daily drops like that, while possible, are much more unlikely in the current market that we have today. But always important to remember lessons of the past when moving into the future. Hopefully we don't see any more 23% drops in a single day anymore. It's just mind-blowing when you really think about it, what a 7,000 point drop in the Dow would look like today. Literally the entire bear market in like 7 hours. Fucking nuts. Nothing futs to keep it PG. This seems to be the story that everybody's paying attention to. I'm not. I largely missed this. Had no idea what was happening. But Aptos token plunges in trading debut. FTX, Coinbase, and Binance were among the first exchanges to list the buzzy new Layer 1 token. Now, this has been wildly hyped for years. The launch of Aptos was basically supposed to be a Solana-Killer. Solana's an Ethereum killer, right? Because it's supposed to be faster and cheaper. Well, Aptos is supposed to be even faster and cheaper than Solana. Imagine that. Faster and cheaper than Solana. Well, as of yet, that has not been the case. And of course, there's been a lot of criticism as to the tokenomics, mostly being FUD. somebody posted a tweet thread that said that 90% of the token supply was to the VCs, FTX, Jump, Andreessen Horowitz, of course, who had invested. It was more like 13%, I believe. I put it in the newsletter today. I don't remember the exact number, but obviously that was massive FUD. But about 50% of the supply going to community, and nobody knows exactly what that's going to be. But when you see out of weight tokenomics, especially if it's massively weighted towards venture capital, you know that they're probably going to dump on you. And so when you get the launch, you generally see price dropping massively as the insiders who have been holding while this has been developed for 4 years sell off whatever percentage of vested coins that they have received, right? But I mean, what is Aptos anyways? Like I said, it's a layer one competitor, and it's supposed to be able to handle 130,000 transactions per second. 130,000 transactions per second. That's TPS. How many is it doing right now, according to this article? Dylon, and not even the fifth Dylon. It's doing 4 transactions per second. Of course, it's going to take a long time to get people using it, and they're already having problems, right? Not problems necessarily with the TPS transactions per second, but their Discord was down. The airdrop didn't work. The Discord came back, and then it was gone, and it was spammed, and nobody knows what the hell is happening. Nobody knows what the hell is happening. But my fear here, not really a fear, but my comment here is that Aptos was largely hyped for 4 years, and they decided, rightfully so, you know, if it's ready and you want to do the mainnet to launch the token, but is in the depths of the bear market. And all they took was a major beating from the community, the coin seeing a huge spike and then drop, which I can show you right here on the chart. This is it, right? It went all the way up to $13 almost on the release. It's now at 767. But also just a matter here. Let's make the colors right on this. Come on. I think it's this one. Yeah, great. That's not it. Now I can't even remember what there used to be Scott Gray. I don't know. Whatever. Do that. And sorry, you guys just saw my OCD kick in when I realized that the volume candles at the bottom were green and red. Don't like it. Didn't like it. So obviously, listen, this doesn't look as bad as people are talking about, and we've seen much bigger moves to the upside. But I think that the pushback from the community and the anger is going to probably prevent a lot of really good projects from trying to launch right now in this market. Yeah. So that to me is the fear, is that a lot of great projects that are probably being built are going to just wait alongside Bitcoin for the Fed to pivot. So, yeah, that's what the Aptos chart looks like right now. Actually, kind of looks like flaggy, to be honest with you. I mean, we can take a look at the Bitcoin chart, but as I said yesterday, why, right? Clear rejection at the 50 MA, clear rejection at the 2017 all-time high. That's the red line. And clearly below this. There's nothing to do here. Absolutely nothing to do here. I have a bunch of random charts pulled up here we can take a look at just because they're at the top here. ETH, Bitcoin, sideways, not too exciting. I can't see getting excited about altcoins right now. This is silver, slaughter. Gold, dead. I mean, Peter Schiff, like talking shit when gold is at 1632, down from over 2000, is absolutely laughable. Bitcoin dominance, to give us an idea of what could happen with altcoins, not really that exciting. And if you're looking at this as a big range, you would expect it to hit the top of the range, which means it's Bitcoin season and not altcoin season. The dollar continues to rage, sitting here at 112. And a lot of that is because of look what's happening to the yen. I showed this yesterday. This is the dollar versus the yen continuing to absolutely annihilate it. Pound is still down. Euro is still down. Everything feeling the pain train. Guys, sometimes it's just not a good time to be paying too much attention to the market. And now is one of those times. Everything is sucking now. Is this it? Wait.
Oh, no. We suck again.
Yeah, oh, no, we suck again. Oh, no, we suck again. FOMC will crash the market. Maybe. I don't know. I think that it's going to be fine. I think that things inevitably are going to be fine because that's my view on life. That's my view on life. So yeah, guys, listen, that's all I really got for you today. Go give James a follow. As I said, obviously very smart. Listen, guys, you know, we started this channel a long time ago, and it will get back to some of this. But it was me making jokes and charts, and I had a bunch of anonymous traders on, and we talked about trades. Right now is not the time. So what we've shifted to, obviously, I'm really trying to bring on the most educated, well-established guests to provide you with the information that you need to understand the markets and to educate yourself. That's been the goal. You'll notice, listen, yes, I don't have the biggest or most engaged with YouTube channel, but I would argue that we certainly have the most credible guests in the crypto space, and that we're trying. And it's hard for me because, listen, I open with a SHIB mitt, and then I tell you that I want to be the adult in the room. But yeah, really trying to bring you established guests who truly understand what's happening and have a position to share with you guys. Don't worry, Miguel. We will get back to the jokes and the charts. But as I've said before, I could share charts all day, but what's the point? There's nothing to see there, man. It's a waste of your time, and I'm fearful that it would encourage people to take a bunch of bad trades for no apparent reason. You know? Yeah. So, anyways, guys, it has been real. Be back tomorrow. Tomorrow we will have, I don't know, I haven't looked yet. Working on it. We have another of those epic roundtables that you guys have come to love. My favorite hour of every week, really. Thursdays, when we get a panel of people together and I get to just listen and learn. I bring on the guests that I want to learn from as well. I mean, that's really, really, really the goal. Texas West Capital. Chris is here. You guys know that Chris Inks, my mentor, we have been, I would say, very close friends for 5 years. And we didn't meet in person, showing you the how the internet works. We never met in person until Vegas last week. And Chris sat on a couple panels, master classes, which I will also be sharing. And we got to get him way more heavily back on this channel. Chris, let's do it. Let's get you on here regularly. The people need your perspective. Anyways, guys, that's all I have for you today. Have a wonderful one, and I will be back tomorrow at 9:30 a.m. Eastern Standard Time with that roundtable. Be announcing the guest soon, so check for that on Twitter if you can find it among the 300 bot comments. Peace.
That's dope.